Hi, Assalamualaikum. So today I am going to present about the comparison between Islamic and conventional financial system. This is basically for a subject Islamic finance, which is Fin 546. So yes, let's get started. In this video, I am going to talk about three things, which is first is value proposition, the second one is operational mechanism, and the third one is instrument offered by the banking system. Before that, my name is Azri Irsyad Benodin. So I am a student of UITM Kota Baru Kelantan in finance degree. So this is my contact. Anything you can just email me, okay? Generally speaking, Islamic banking system is a banking system which based on Islamic law, or we call it Sharia principle, where it maximizes profits subject to profit loss sharing system. While conventional banking system is a banking system which based on conventional law, where it maximizes profit subject to differential interest rate. Let's start with the first one, which is the value proposition of banking system, which means the advantages or benefits from the financial system. The first benefits, which is it helps by assisting financial inclusion. World Bank has defined financial inclusion as the individuals and businesses have access to useful and affordable financial products and services that meet their needs, transaction, payment, savings, credit and insurance, and delivered in a responsible and sustainable way. The conventional banking system is based on interest payment at a rate preset on the deposits of money. Payment and receipt of interest is prohibited in Sharia law, so Muslims abstain from banking. However, through Islamic banking, financial inclusion can be promoted and bring a larger pool of savings in the local and global economy. Second one is reducing the impact of harmful products and services. Sharia principles forbid any transaction that support industry or activities which are forbidden in Islam. For example, usury, speculation, and gambling, whether these are illegal or not in the place of transaction. The third benefit of the banking system is accelerating economic development. In the Islamic banking industry, each bank will invest in promising business ventures and attempt to outperform its competitors in order to attract more funds from its depositors. This will eventually result in a high return on investment both for the banks and depositors. This is unlikely in conventional system, where depositors redeem returns on their deposits based on the predetermined interest rate. So that is the difference between the economic development of the financial system. And the last one is the principle of financial justice. In Islamic financing paves the way for the sharing of net profit or loss and the risk involved in a proportional manner between the lender and the beneficiary. Therefore, it is a financier is expecting a claim on profits of a project. It is necessary that he or she should also carry a proportional share of the loss of the project. While contrary to the conventional financial, which is the conventional financing looks forward to profit through interest payments and makes the beneficiary completely liable for any risk. We proceed with the second one, which is the operational mechanism of banking system. It means how does the financial systems work. So let's check it out. This one is the sources of the financial system. For Islamic banking system, it is based on Sharia principle, which is a set of norms, values, and laws that go to make up the Islamic way of life. Characteristic of Sharia compliant banking and financial system are free from riba. While conventional banking system is a non-Islamic banking system which is based on fully man-made principle, which the interest rate it is considered to be the price of credit, reflecting the opportunity cost of money in non-Islamic banking system. We proceed with the principles of banking system. Islamic financing avoids interest-based transaction, which is also known as riba, and instead introduce the concept of buying something on the borrower's behalf and selling it back to the borrowers at profit. In place of interest, a profit rate is defined in the contract. While in conventional banking system or financing, lenders lend to borrowers to make a profit from the interest charged on the principal amount. For property loans, borrowers pay an interest on the outstanding principal amount, which is the interest rate can be a fixed rate or based on floating rate. The third one is prohibited in the banking system. The main practice that are considered unlawful in Islamic finance are: the first one is usury, or we can also call riba. The third one is ambiguity in contracts, or ghara, and the third one is gambling, or also can be called as a maisir. So, riba is haram in all of its aspects. It is considered as an unjustified increment in borrowing or lending money, while ghara is banned under Islam because it is associated with uncertainty, deception, and risk. And for the maisir is forbidden on the grounds that money should be earned by way of work and effort, not involving a game of chance. It can be said that as Islamic banking is based on Sharia principle, those items that have been said, which are ghara, riba, and maisir, are prohibited in Islamic financial system, while there is no prohibited items in the conventional financial system. That is the difference between the Islamic banking and conventional financial system. The third one is the instruments offered, which is the products which the financial system provides. The first product is deposits or liability, which both conventional and Islamic banking offers to their customer. In Islamic banks, it offers deposit products based on the following structure, which is first one is qard and the second one is mudharabah. Qard is basically a current account which offered under this contract, where the risk of the funds lies with the bank and no added benefits are provided to the client solely based on this facility. And for the mudharabah, it is a type of partnership where client funds are invested in various businesses and returns are shared between the bank and the client as per agreed profit sharing ratio, whereas the loss is shared as per the investment ratio. And the term deposit and saving accounts are offered in the basis of mudharabah. And then for the conventional banking system, they accept deposits on the basis of loan for all types of deposit accounts, including term deposit, savings, and current accounts. Interest-based returns are provided for the savings account and term deposits, whereas current account may offer 3 banking facilities. In addition to this, conventional bank invest to the deposits in non-Sharia compliance avenues and subsequently earns non-Sharia compliant returns. And this is the products or services which offers by the Islamic banking in terms of deposits. There are 4 types of deposits offered by the Islamic banking, which are current account, savings account, general investment account, and special investment account. And this will be the applicable concept, which are wadiyah, damana, and mudharabah. The second products which are offered by the both financial systems is lending or financing. In Islamic banks, they offer financing or leasing facilities to their clients to fulfill their business requirements on the basis of following contracts depending on the requirements of the client. The Islamic bank financing transaction characteristics are: Islamic bank takes the risk of the asset, Income is earned through sale or leasing contracts. The share profit and bear loss as the case may be. And the fourth one is in case of late payment or default by the client, there will be no penal charges. For the conventional bank offers lending facilities to their clients to fulfill their cash requirement on the basis of loan contract, where the relationship between the bank and client is that of lender and borrower respectively. And this will be the characteristic of conventional banking loan contracts are no risk of underlying assets. Income are through interest and late payment charges on delayed payments and shall constitute bank's income. This is the example of the products and services in financing which offered by Islamic bank system. There are 1, 2, 3, 4, 5, 6, 7, 8, 9. There are 9 products in financing which are cash line facility, computer financing, education financing, equipment, fixed asset, hire purchase, home or house financing, and land financing, and the last one is leasing. And this will be the applicable concept which are there are buy ina, buy bitaman ajil, murabahah, and ijarah to mabai. So yes, the last products offered by both banking system are trade finance. For the Islamic banking, they offer trade finance related operations under the concepts of services, guarantee and financing with the following condition. The first one is commission-based income as per the guidelines of Sharia. The second one, income through payment and documents facilitation services. The third one is income through sale or lease of assets. The next one is a share profit and bear loss as the case may be. And the last one, in case of late payment or default by the client, there will be no penal charges. Contrary, in conventional banking, they offer trade finance related operations under the concept of services, guarantee and lending. And the characteristic of the bank of the conventional bank trade transaction is the first one is commission is based on income, and then the income through guaranteeing payments, income through interest on loan payments, and there will be additional interest income on delayed payments by the client. And this will be the products which offered by Islamic banking in terms of trade finance. There are 6 products offered by them, which are accepted bills, bank guarantee, export credit refinancing, letter of credit, shipping guarantee, and the last one is trust receipt. And the applicable concept offered in this banking system are murabahah, baidain, kafalah, wakalah, ijarah, and by bitaman ajil. As a conclusion, it can be said that Islamic financial system is a free interest and government discounts, share risk with the banks, and applicable for Muslim and non-Muslims, while conventional financial system is more transparent, better organization, no halal requirement, and less paperwork involved. So yes, they do have pros and cons, and it is up to you guys whether to choose Islamic financial system or conventional financial system, because they do have their own goods and advantages. So that's all from me. Thank you. Bye.